really interesting article here on Bloomberg, and it's trending on LinkedIn, which is why I picked it up. But it explores the idea that in jobs and in the job market currently, because of how tight the labor market has become, we've got something like more than 11 million open jobs, and the way that the economy is looking right now with careers and money and all of these kinds of things, that companies are beginning to inflate job titles. All else being equal, what else can you kind of pull in terms of a lever when it comes to creating opportunity for employees? Well, it's job titles. And it's an interesting idea to think about in terms of the risks that it creates for the greater economy as well. And so the genesis of this conversation is really the idea of LIFO, so last in, first out. And human beings, of course, are not inventory, and LIFO is typically an inventory kind of concept. But there is definitely a last in, first out mentality when it comes to job markets. And if you've been in jobs as long as I have, you definitely can see this. So, it's people are quick to change companies, quick to move careers, quick to change jobs, to chase, a few $1,000s more, a few tens of $1,000s more in the short term, a bigger title in the short term. And if you don't weigh or if you don't time your moves correctly, and you go into, you change your jobs right when the company goes into a downturn or a company starts to struggle, then what you find is that typically the company is going to reward those who have the longest tenure. They're going to reward loyalty, and they're going to get rid of the people that have joined the most recent, because it's a function of a few different things, but one being that loyalty is important, but also that you can't really create that much value in a short amount of time for an organization unless you're in a role that's pretty special. So that kind of leads into the article here, which is the idea that the big sounding job titles are the way that companies are getting the talent or access to talent that they need right now. Now the risk, of course, is that you get a workforce, and we're seeing a little bit actually, if you think about the last few years, that you might be 1 year, 2 years, 3 years out of college, or 1 year, 2 years, 3 years out of high school, thinking that, hey, you know what, everybody around me has got a manager title, everybody around me is a senior manager or a senior associate, and I need to be that too. And so what happens is you get this economy of people that are just chasing big titles, and then what happens is that a little bit anecdotally, like banking, where everybody is a vice president, regardless of how long you've been there. And so it's an interesting thing to think about, because we are in a world when we think about employer branding, or we think about things where it's becoming increasingly difficult to attract the right kind of talent that you want, because employer value propositions become quite similar in an environment where everybody is looking for talent, and it's hard to access the right talent. And so, you've only got a few levers to pull. Can you pay people more? Can you create more, opportunity in terms of career growth? Can you give younger workers, for example, access to opportunities and responsibilities that they wouldn't have if they joined a different kind of company? And then, one of the final levers is, do you just inflate job titles? And so it's dangerous for the economy, because it's also dangerous actually for the individuals who kind of go into this, because what happens is you end up being a 3 or 4 year professional, and you've got a senior manager title, for example, and that's not transferable anywhere else. So you may, as an individual, feel like, hey, you know what, I'm a senior manager. I've at my company right now, and then you go into the larger kind of lake of job opportunities, and you realize that, well, that doesn't really hold up anywhere else, and then you're going to end up going back to whatever it is, associate, senior associate at a larger company. So it's the idea that you want to make sure that you're the right size fish in the right size pond versus a large fish in a small pond, because being a large fish in a small pond typically doesn't translate to being a large fish in a large pond. You typically have to go back to being small. So it's definitely an interesting time in the job market. It'll be interesting to see how job titles play out in the future. But it definitely indicates one of the last levers that companies can pull before what is an inevitable kind of squeezing of the job market going forward.